Japanese yen support gives as U.S. tariff threats sink Wall Street. Asia-Pacific market open talking points. Wall Street ended worst week this year as U.S.-China trade war fears consumed markets. Anti-risk Japanese yen outperformed and may continue to do so as Asia stocks decline. U.S. dollar to Japanese yen downtrend may resume deeper into flash crash lows after taking out support. Not sure where the Japanese yen is heading next? Check out the third quarter fundamental and technical forecast. Anti-risk Japanese yen crushes IT as trade war fears boil. The anti-risk Japanese yen and Swiss franc outperformed against their major counterparts as Wall Street wrapped up its worst week this year. While the S&P 500 dropped nearly 0.75% on Friday, it was European benchmark stock indexes that fared the worst. The Euro Stoxx 50 index tumbled 3.26% and 3.11% respectively. The source of anguish in financial markets stemmed from an escalation in U.S. trade tensions with the world. Markets were digesting intention from President Donald Trump to slap an additional $300 billion in Chinese import tariffs on September 1. Meanwhile, across the Atlantic Ocean, European markets were trembling ahead of Mr. Trump's statement on EU trade. It turned out that President Trump signed an agreement to make access for beef exporters to the EU easier. Shortly afterwards, however, he added that EU auto tariffs are never off the table. Some of the worst-performing majors were the pro-risk Australian and New Zealand dollars. The US dollar had a mixed session, falling against JPY and CHF, but doing better against AUD and NZD. In this case, trade war fears worked to overpower market reaction to Friday's US jobs report. It was a mixed bag, with the country adding fewer jobs than expected as unemployment rose, but wage growth saw an uptick alongside labor force participation. The markets are now fully anticipating another Fed interest rate cut in September to help offset the consequences of higher taxes consumers may expect from the tariffs. U.S. dollar to Japanese yen technical analysis. This resulted in U.S. dollar to Japanese yen closing at its lowest since April 2018 after it cleared a critical psychological barrier between 106.78 and 107.21. As such, the Japanese yen may extend gains against the U.S. dollar ahead as it looks to confirm a long-term bearish continuation pattern outlined in the third quarter technical forecast. Given downside confirmation, we may see U.S. dollar to Japanese yen descend further into January flash crash lows. U.S. dollar to Japanese yen daily chart. Japanese yen support gives as U.S. tariff threats sink Wall Street. Chart created in TradingView. Monday's Asia-Pacific trading session. As Wall Street wrapped up on Friday, Donald Trump said that he could raise tariffs on China to a much higher number. As such, we may see Asia-Pacific benchmark stock indexes follow lower in continued risk aversion. This would support the fundamental backdrop for continued appreciation in the Japanese yen. The Australian dollar is thus vulnerable, with it also eyeing Caixin, China PMI services data ahead.